dive into a number of different topics, but I want to actually start off with just a little bit of level setting. Could you please, just for the audience, in case everyone's not familiar with the mandate of NYDFS,
Yeah.
could you just articulate
Yeah.
that?
Well, first, thanks for having me. Also, I would not mess with you. You could be a regulator. You can, so the New York State Department of Financial Services oversees basically all the financial services in the state here, including a couple thousand banking institutions and credit unions, 15 GSIBs, 120 foreign banks. We oversee all insurance, health, life, and P&C. For a long time, we've been the only prudential regulator of crypto. We're glad to have some federal partners coming online. I know we'll talk about that. Yeah. Student lending, mortgage servicing, pharmacy benefit managers, money transmitters, you name it, we oversee it to the tune of about 10 trillion in assets in our regulated entities.
No small job,
Small feat.
That's for sure.
Yeah.
And on the digital asset side, you've really spent some time building up the team.
Yeah.
How many do you have right now
Yeah.
working on digital assets?
Yeah, so we have a virtual currency team of about 60 people. When I came into the department now 4 years ago,
Right.
it's about 3 people. So we've done quite a lot of work hiring there and throughout the department. I'm pretty sure, you'll keep me honest, I think it's maybe the largest crypto regulatory unit in the world with 60 professionals. And that doesn't include the folks in our general counsel's office and our enforcement division who also do quite a bit of work in the space. So it's a great team.
That is impressive,
Yeah.
a brain trust of that many people sitting
Yeah.
in one organization.
Yeah.
So let's dive into, a lot has changed since the last year that I saw you and we spoke. With this current administration's stance on digital assets, what is your perspective on sort of where we are?
Yeah. I think we've been working for a long time with Congress, with the last administration, with this administration, on making sure there's a good federal framework in place. As I said, DFS has been regulating the space since 2015. You have to have a license, either a BIT license or a limited purpose trust charter to do virtual currency business activity in the state of New York. We have full scope supervision and examination, obviously enforcement authority, but we've been waiting to have federal partners for a while and have been working, as I said, across administrations to make that happen. So we were delighted to see Genius go through. It really is based quite a bit on the stablecoin guidance that we put into place now almost 3 years ago. When you think about the reserving requirements, the redemption timing, the asset mix that's required of the reserves is all really based on what we've done in New York. Right. So we're excited to see implementation and then see if the market structure bills move forward as well.
If we could, and again, there has been obviously a lot of excitement with the Genius Act being passed into law. Could you delineate for the audience a bit about sort of, New York DFS versus the federal level oversight, which may come in as this is incorporated? It will take another year or two, obviously, with rulemaking and the implementation. But if you could walk us through a little bit of that, I think a lot of people will be curious because let's face it, stable coins are top of mind for a lot of organizations.
Yes. Yeah, absolutely. We fought really hard to preserve a role for state regulators in the Genius Act and in various iterations of all the other bills that have been making their way through Congress over the past several years. We thought it was really important, because DFS had already had such a leadership role, and we thought, we've got this great reg, we've got 9 pieces of guidance, we have all this experience, this great team, right? Why would you want to preempt that and sort of wipe that all out? That didn't seem to make sense to us. Selfishly, we wanted to preserve that authority. But also state regulators, I think, as evidenced by what we've done at DFS, are more nimble, right? So we have this amazing team that stays abreast of all the developments in the industry. It's really quite a diverse team. So we've got folks from foreign regulators. We've got folks that came from other regulators in the US. We've got a lot of sort of crypto natives and cryptologists and financial crimes experts and forensic accountants that comprise this team. And we are able to use our full suite of regulatory tools to move more quickly. And I think just like we see on the banking side, having the state and federal pathways coexist is going to be good for the industry and good for consumers.
So let's talk a little bit about New York itself,
Yeah.
because it seems to be going through a bit of a, what I would call digital asset renaissance.
Yeah.
What are you seeing?
Yeah. Well, it's so interesting. I remember, so my two predecessors ago, when the bit license was first put into place, it was like, you're going to drive this industry out of New York, right? And indeed, there were lots of companies who left, or a couple companies that left. I think in the intervening time, right, we've added a lot of transparency around how we regulate the space. We've done these 9 pieces of guidance. We've built this team. We've made it sort of a better place to be. And New York in general, I think as the virtual asset space continues to come together with traditional finance, where else would you want to be but New York? My boss will be very happy that I made the plug. Yeah. But I do think there's a lot to be said for the ecosystem, not just as we look at the fastest growing sectors in New York. Technology is the fastest growing sector in New York, where we see it sort of declining in other sort of tech capitals. It's increasing here. You put that together with the fact that we're the financial capital, that we have these transparent rules on the books, right, an expert team at the regulator. We just see the space growing and growing in New York. And we keep close eyes on the stats. So if you look at investment in virtual currency companies over the past several years, the plurality of that investment is consistently in New York-based and regulated companies.
Well, it certainly does feel like there are a lot of companies setting up shop, moving, relocating to New York, and it certainly does look like there's a big halo effect happening, which is fantastic.
Yeah.
But if we were to flip to the other side in terms of concerns and risks, you have put out some meme coin guidance a while ago, and there is some activity, I think, that perhaps lends some concern.
Yeah, absolutely. So I think for us, we were starting to see more and more meme coins, and we've seen this, right, in the arc of the industry, sort of ebbs and flows of sentiment-based coins. We don't view it as our role to pick winners and losers, right? This coin is good, this coin is bad. We do have a green list for coins that we have approved. And then what we said is we're going to set up a coin listing regime for our companies. So all of our regulated entities have to have a coin listing protocol, right? Governance protocol that dictates how they choose which coins they will list or custody, right? And they'll do business with. They also now have to have a delisting protocol. What are the actions you will take if you deem a coin or a token is not up to snuff? Some of our companies have earned the privilege of being able to self-certify coins. It's a privilege you can gain and it's a privilege you can lose, I will say. So we have seen that full life cycle. And then for those that don't have the privilege of self-certification, they have to come to us at DFS to get pre-approval to engage with a new coin. On the sentiment-based coin guidance, we put out a notice to consumers just to say, make sure you're doing your due diligence on all things, right? This is true for all kinds of financial instruments, but make sure you are approaching this with caution as a consumer. And then similarly, we put out guidance to our regulated entities to say, remember that there are requirements around your governance and the stability and the uses of these coins that you are responsible for policing pursuant to your own coin listing guidance that we have approved. And if we find that you have violated your own coin listing, right, your own risk tolerance, we will not hesitate to use all of our regulatory tools to correct any errors.
Well, with that, take note, everyone, especially if you're regulated. The compliance tools and analytics and the availability of such tools, how have you incorporated that into making sure that people are complying?
Yeah. Well, look, I think it's important that we all, whether you're a regulated entity or a regulator, that you're using whatever tools you have at your disposal, including technological tools, right, to help with compliance and, in our case, supervision. So we put out guidance several years ago requiring our regulated entities to use blockchain analytics guidance in helping them in their compliance. We just then, last week, I think, put out guidance to our banking institutions that to the extent The banking institutions are now engaging more in virtual currency business activity, which is the term of art we use in New York, VCBA, that our expectation is the banks will also now use blockchain analytics platforms for their own compliance needs. And that's, I think, just one example of how we try to find a place where we can be both principles-based, right, and not be overly prescriptive, but provide enough clarity to the regulated universe that our regs or our guidance are two qualities that I like to make sure we have, that they're both actionable and practical. And so that's what we did with the blockchain analytics guidance, both for banks and virtual currency companies.
Great. And this might be a question that's kind of adjacent to what I've just asked you, but in terms of what's going on in DC, there's a lot of talk around modernization and streamlining and, cutting the fat if there is any. From a DFS standpoint, have you found any use for AI or technology tools to help you do that very thing?
Yeah. Well, so we certainly use blockchain analytics platforms in our supervision. We're piloting a lot of use cases for AI, not so much yet in the crypto space. Certainly, as we look at generally regulatory filings, we've got some pilots there. Unrelated to virtual assets, but we're working on a very cool project with SUNY Albany related to weather data, homeowners insurance, and mortgages to look at what's going to happen in the insurance and mortgage markets as a result of climate change. Most people don't really appreciate that about 80% of New York State's population is coastal. Right? It makes sense if you're downstate and you're on an island in Manhattan, right? But 80% of the population is coastal. So we're using AI and other tools to help us in all kinds of supervisory ways to make sure we're protecting consumers and New York State.
Wow, see, you learned a non-crypto fact today.
Yeah.
I bet most people didn't know that.
We're a well-rounded regulator here. So
You have a lot of ground to cover.
we've got a lot of things to do.
So, going back to sort of New York and the growth of the tech sector, and we're seeing, we use the word convergence at GBBC a lot, which is the convergence of the technologies being now incorporated into the banking sector, but also the fintech and young crypto companies. When you look at what is happening right now, what do you see? Do you see an and situation, meaning like we eventually evolve through this period, or are you seeing actually places where you think you'll have to make new rulemaking or you'll have to come up with additional guidance because it is that new, like DeFi, for example?
Yeah, absolutely. I think, the beauty of being a nimble state regulator in a place like New York is we do have so many tools at our disposal, right? So we can write rules, we can do guidance, we can do FAQs and webinars. Enforcements are a last resort, but they serve their purpose as well. So I think we will continue to roll out new pieces of guidance, thinking about this convergence, right? We did the blockchain analytics for our VC companies, and we did it for the banking institutions when the time was right. And I think for us, that's a big part of the equation is you want there to be enough need and interest for the regulator to weigh in. You sort of don't want to preempt a moment or what the markets are doing. But you don't want to be lagging so far behind them that real harm is done or that you can't provide the clarity and transparency that the industry needs to act responsibly. And so as much as the substance of the things we do is the most important thing, right, the timing is also very important. But I think when it comes to cybersecurity and virtual assets, AI and virtual assets, right, banking and AI and cybersecurity and virtual assets, right, these Venn diagrams are becoming more and more important and apparent, and to the extent that, again, we can provide actionable, practical guidance for the regulated space, I think that there's an important role for us there.
Great. And this harkens back to, I think, questions the same kind of similar questions I've asked you, but times change, so I ask the same questions sometimes. In terms of your engagement with communications, particularly at the federal level now, do you find that it's increased, or is there now more collaboration because of the changing nature of obviously what's going on in digital assets?
No, I think for us, I've always been a believer that ideology and financial regulation are a bad mix, right? There really, in my mind, is no place for ideology and financial regulation. And I say that because there's just no part of the economy that works, you think about hospitality or transportation or agriculture, all of it relies on a financial system, right? Banking, insurance, capital markets that works well. And if that layer doesn't work well, then nothing else is going to work well. And so for me, our role at DFS is really about calling balls and strikes. I say that to say it really doesn't matter what's happening in Washington or with our counterparts around the world. We are always here to collaborate, to harmonize where we can, to lend expertise, to learn from other people. We just launched earlier this year the Transatlantic Regulatory Exchange, which is a secondment program with the Bank of England, specifically around payments and digital assets.
Great.
And we're going to expand that in the months and years to come to other foreign regulators. So for us, that engagement, that collaboration is always front of mind.
And you've raised an excellent point. You have actually been really forefront of international engagement. And it's great to hear that you are looking at other countries and jurisdictions as well. And will that be necessarily, so when you look at potentially having a collaboration with an international regulator, will that include all emerging tech, or do you tend to kind of separate out a crypto agreement or understanding?
Yeah, so as foundationally, we have lots of information sharing agreements, supervisory arrangements that cover the entire remit that we have and other regulators have. I think when it comes to these particular secondment programs, it'll vary from jurisdiction to jurisdiction about what is our most common interest, and frankly, what's the best opportunity for our respective staffs. It also, in addition to being an important supervisory and regulatory tool, it's a great recruiting and retention thing to have, to say to somebody at DFS, like, you can go spend 6 to 12 months in London, right, and vice versa. So we'll see who comes online next, but I'm excited to expand this program.
Fantastic. And I think one of the things that maybe some of the audience here would probably like to know is, when you think about what is coming up, what kind of trends have you seen that are different from the crypto digital asset space than even from maybe a year ago? Are you seeing some changes in trends?
It's interesting. Crypto is sort of going through some of the same growing pains that fintech went through 15 years ago. Like, for those who've been around in financial services as long as I have, I remember when we first started saying fintech, they were like, and I was in the White House then, and they were like, we're going to disrupt financial services. I remember people coming in and telling me, like, Citibank isn't going to exist in 15 years. Here we are, right? And the digital asset crowd had a little bit of that as well. And I think now just a little, right? But now what I think everybody is finding is that integration with traditional finance is really necessary for broad adoption, for lots of other reasons. And I think when I sit down and talk to our regulated entities and hear their roadmaps and their plans for what's next, some of it is completely new and innovative. A lot of it is sort of like, oh, I've seen versions of this before. People starting to talk about making derivatives out of things, where I'm like, oh, I feel like we've seen this movie before. Maybe not. But there are lots of, I think, innovations now that people want to undertake with digital assets, with tokens, that are versions of what financial services have done before.
Yes, we hear that sometimes, that people have just put a different name on something that actually existed. Was
like, we
invented
remember this movie
quite a while ago. Yes,
Yeah,
exactly. From a licensing standpoint, are you seeing an increase of the number of applicants coming in to license themselves to do business in New York?
Yeah, our application pipeline only ever gets longer. As I've been in this role for 4 years, we've gotten better at moving them more quickly. Sometimes, frankly, that means saying no more quickly to applicants as well. But the interest in being here in New York only continues to grow.
And if I may ask, when a applicant is rejected, let's say, is there a period where they could course correct and then reapply?
Yeah, so usually what we do in the application process is it's fairly iterative. So we will issue deficiency letters to tell companies precisely where they are deficient. They have an opportunity to cure. So it's really where we see an inability or an unwillingness to cure the deficiencies, where we say, go away for a little while and then maybe try again. It's not a hard and fast rule, but I would say more often than not, we can get there with an applicant before we have to reject them, but not always.
Great. And then so I've asked you the question around the crypto groups
Yeah.
and digital assets groups, but from the banking sector,
Mhm.
are you finding increased questions or inquiries or discussions around the crossover into stable coins in
Yeah.
particular and
Yeah.
also digital assets?
Yeah, this has been a really interesting trend to watch, where there was a little bit of interest, I would say, sort of 22 coming into 23. Then with the banking crisis in early 2023, everybody was like, we're back to brass tacks. Like we just want to
Blockchain,
do
what?
banking. Yeah,
Yeah.
everybody sort of put their heads down. And I think now, right, there's this resurgence in interest in TradFi generally, certainly in the banks. In New York, the banks are required to come to DFS to get pre-approval before engaging in VCBA. So that is a requirement on the books, but we've seen lots of interest from our banks, and we've had lots of success helping them roll out new products and services, both for virtual currency entities, but also for their more standard banking
And that would
products.
include even foreign entities that are in the U.S.
If you are, for instance, a branch regulated by DFS, yes, that would include.
Exactly. Okay.
Good
So-
clarification.
So you are definitely getting an increased demand on both sides of the fence.
Yes, absolutely.
Wow. Okay. Well, we have a few minutes left, and I wanted to ask you to, thank you. We got our
Our
time
timer.
checker here. We're here during the UN General Assembly, and we care very much about SDGs. And I think, this is a question that you've addressed before, and you've actually made some really amazing comments around climate action, but also around financial inclusion. If you don't mind,
Yeah.
could you actually say a few words about, how do we help as entrepreneurs and builders here around financial access and inclusion?
Yeah, it's an interesting thing, I think, for the virtual asset space, because it was maybe 2-3 years ago where people would apply for a license and they'd come in and they'd be like, we're about inclusion. Like, this is going to change the game for inclusion. And because I am a very data-driven person, I would say, great, how many of your customers were previously unbanked and now, right, have access to the financial system?
Yes. How many?
And typically people would say, well, we don't have that data. And I was like, well, this is not a very compelling case then for inclusion now, is it? And so I offer that anecdote because I do think there's obviously a real problem. I think virtual assets, distributed ledger has real potential to be a solution here for inclusion. I still feel like there's maybe been more talk than proof, but I am optimistic that will change.
For the entrepreneurs out there, Superintendent Harris is looking for proof and real data. So get on it. On the ESG side, reporting, particularly for financial institutions, you have spoken before around this topic. What concerns you the most? And I think you mentioned also data and using AI for the data around climate.
Climate and mortgage, yeah. I mean, we think about climate purely from a safety and soundness perspective, right? So on the one hand, we have lending institutions where, right, they need to understand the climate risk to their mortgages. It's not our role as a regulator to say, lend to this, but not to this, do business with this, but not, like, that's up to companies and markets, right, in their own risk tolerance and governance. But it is our job to say, no matter your business model, make sure you are incorporating climate risk into your risk management framework. And this is true, we've got very small lenders, for example, who lend in a very discrete geographic area that might be at risk, that needs to be, it's not that they shouldn't lend there, but they need to incorporate that. Similarly with multinational insurance companies. The other thing that we were very keen to point out to our regulated entities, and I say this sort of in jest, but I think it's a very real thing, is the risk from climate is not just potentially to the business, but it's also operational. Where are your data centers, right? How do you think about climate risk? Like, is the generator on the roof and not in the basement? I think there's probably a number of people in this room who were around when Sandy hit, right? And the whole bottom of the island was black, except for like 200 West Street, because they had put the generator up on the roof. So that's something we want to make sure our regulated entities are thinking about.
Wow, that's a very good point.
That picture is like New York Magazine cover after Sandy, right? Is a really iconic one. So I'm dating myself maybe a little bit, but.
Person who put the generator on the roof should
Yeah.
demand a raise.
Job security.
In our final minute, I just want to ask, increasing demand in New York, more people coming to New York, tech sector growing, crypto, digital assets, banking, all of it's growing. Is DFS, do you have the staffing that you need to
My favorite
meet the
question.
needs?
My favorite question. So, well, I would say since in my 4 years, we've now hired or promoted 1,200 people. We're the largest the agency has ever been, and that's not size for size sake. When I came in, I did a risk-based analysis and said, where do we really need people? I'm good at making a compelling case with data, so I went to the legislature and others. I said, here are all the horrible things that are going to happen if you don't give me staff, and they found that compelling. So I can tell this very scary story. So we continue to staff up. I have spent my career back and forth between the public and private sectors, federal government, big law. I was a startup founder, took my company public. So I've sort of seen and done it all.
Right.
And I've loved everything I've done in my career. Public service is both the most complicated and the most rewarding. So since we're talking about staff and recruiting, if anybody here wants to take a pay cut and come to DFS, you are welcome.
DFS is hiring. Well, thank you so much for taking time out of your busy schedule. I know there's a person out there who's motivated.
There's one. We're
Reach out to
always hiring.
DFS. It's a great team. The
Yes,
team
it
that
is a
we have,
tremendous team.
interacted with,
Yes.
it's just superb. So
Yeah.
thank you for building such an amazing, not only brain trust, but also an organization that clearly has helped, clarify, and also, frankly, stability is underrated sometimes.
Yeah.
And having that
Agreed.
stability over the last 4 years, you
Yeah.
guys have been really consistent and very clear about your messaging, and that's really great.
Thank you.
Appreciate your time. I want to thank all of you for taking the time this morning. We are going to a break now, but just 10 minutes, so come back. Thank you.